Hello everyone. In the previous video, we studied about the functions of the central bank. And among that, the last one was the control of credit. So now we have to continue with that function. According to that function of the RBI or the central bank of a certain country, RBI has to perform the function of a controller of credit or the controller of money supply in a particular country. And that function follows the monetary policy. That is, the monetary policy which we are talking about is a policy of central bank which is related to the control of money supply in the economy. So this policy is framed by the Reserve Bank of India with the motive to control the money supply in a particular economy. And for running this policy, various instruments, measures or techniques of credit control or monetary policy are followed by the central bank. Among those instruments are the main two. The first one is the quantitative methods or measures, and second one is the qualitative methods or measures. That is, all the instruments through which the credit is controlled or through which the money supply is controlled in the economy is mainly divided into two parts. The first part is the quantitative methods and another one is the qualitative methods. Now the main motive of quantitative methods is credit control, which focuses mainly on the overall supply of money in a particular economy. That is, all the measures which undertakes the supply of money or which mainly focuses on the money supply comes under the quantitative methods. On the other hand, in qualitative methods, those instruments of credit control are there which focus mainly on the selected sectors of the economy. So now we will study each instrument one by one, through which we will come to know that how these instruments work. So before starting with that, I would like to tell you that these instruments are mainly used to correct the situation of inflation or deflation in the economy. Now inflation is basically the consequence of excess demand in the economy. Whenever the demand is in excess than the supply, the prices in the economy rises, which is known as the inflation. And deflation is the opposite of this. That is, in case of deficient demand, when demand is less than the supply in the economy, in that case the deflation takes place. So to correct the situation of inflation, money supply needs to be decreased so that the people are left with less money and they may buy less. On the other hand, to correct the situation of deflation, we need to increase the money supply so that people may be given more money and they may do more purchases or more demand. So this is how these methods, that is the instruments under quantitative measures, work. So one by one we will study these instruments now. As I already told you, quantitative methods influence the overall supply of credit in the economy. So among that, the first one is the bank rate. A bank rate क्या होता है? It is the minimum rate at which RBI lends money to commercial banks for long term, mainly period of more than 90 days. अब ये वो रेट है जिस रेट पे RBI पैसा देता है to the commercial banks, and mainly commercial banks जो होते हैं वो इस रेट पे RBI से तब पैसे लेते हैं जब उनको immediate cash requirement होती है. In that case, the commercial banks will approach the RBI and जो rate RBI charge करेगा on the loan given by it to the commercial bank is known as the bank rate. अब जिस rate पे commercial banks को loan मिल रहा है from the RBI, that rate will definitely affect the market rate of interest. What is market rate of interest? It is the rate of interest which is charged by the commercial banks from general public. दैट इज़ जब हम लोग लोन लेने जाते हैं फ्रॉम द कमर्शियल बैंक्स, तो उस केस में जो रेट ऑफ इंटरेस्ट चार्ज करा जाता है हमसे, मतलब सपोज आई वेंट टू अ बैंक फॉर टेकिंग अ लोन ऑफ ₹10 लाख एंड ऑन दैट द बैंक चार्ज मी इंटरेस्ट ऑफ 5%. So 5% of 1 lakh equals to 5,000, which is known as the market rate of interest. And this rate of interest depends on the bank rate, that is जो interest commercial banks को देना पड़ रहा on the loan taken by it from Reserve Bank of India, that is known as bank rate. and after that this rate affects the market rate of interest. Therefore RBI क्या करती है, इस rate को influence करने के लिए it will either increase or decrease the bank rate according to the requirement. and ये जो rate होता है ये तब charge करा जाता है जब commercial banks loan लेते हैं for long term, mainly for a period of more than 90 days. and along with that इस लोन के लिए या फिर इस रेट के लिए कोई भी सिक्योरिटी कमर्शियल बैंक्स को नहीं देनी पड़ती, दैट इज इट इज़ विदाउट एनी कोलेटरल. On the other hand, there is another rate known as a repo rate, and this is the second quantitative instrument which is used by the Reserve Bank of India. Now, what is the difference between the two rates? Basically, it is also the rate at which RBI lends loans to the commercial banks for short period. अब बैंक रेट में क्या था, लॉन्ग पीरियड के लिए लोन्स दिए जाते हैं, एंड अंडर रेपो रेट द लोन्स आर गिवन फॉर अ शॉर्ट पीरियड ऑफ टाइम and that period mainly ranges from 1 day to 14 days. And in case of bank rate, no collateral is given or no security is given for taking the loan by the commercial banks. But on the other hand, in case of repo rate, when RBI is providing loan to the commercial banks, the securities are to be given by the commercial banks to RBI. That is, they have to pledge their security with the RBI, and that security may include any kind of government securities. Now this repo rate is also called repurchase rate. It means that जो सिक्योरिटीज कमर्शियल बैंक्स ने लोन लेने के लिए RBI को दी, after a certain period of time, what will RBI do? It will allow the repurchase of the securities by the commercial banks. That is, suppose as a commercial bank I have taken loan for 14 days, and after 14 days I will repurchase my securities from the RBI. That is why this rate is known as a repo rate. अब कौन सी securities मैं repurchase करूँगी, जो मैंने at the time of loan RBI को दी थी as a security. That is why this rate is also known as repurchase rate. Basically, a repurchase agreement is signed by both the parties stating that the securities will be repurchased by the commercial banks on a given date at a predetermined price. What that means कि जब भी commercial banks loan लेगी for a short period from the RBI, एक उनके बीच में agreement sign हो जाएगा which will state कि after this particular date the commercial banks will repurchase their securities at a particular price, जिसके ऊपर उनको एक इंटरेस्ट देना पड़ता है known as a repo rate or repurchase rate. So this was the bank rate and repurchase rate. Now we will come to know that how it is changed in case of inflation or deflation by the Reserve Bank of India. You can see over here, in case there is inflation or excess demand in the economy, in that case the bank rate will be increased by the RBI. That is, bank rate is the rate at which the RBI lends money to the commercial banks. तो जो अब लोन मिलता था कमर्शियल बैंक्स को वो अब हाई रेट ऑफ इंटरेस्ट पे मिलेगा, जिसकी वजह से क्या होगा, इंक्रीज इन कॉस्ट ऑफ क्रेडिट फॉर कमर्शियल बैंक्स. दैट इज, जो क्रेडिट कमर्शियल बैंक्स RBI से लेते थे उसकी कॉस्ट इंक्रीज हो जाएगी. After that, that will further lead to increase in the market rate of interest. That is, the rate of interest which is charged by the commercial banks from the general public will also increase because of the increase in the bank rate. After that, जब हमें लोन ज़्यादा rate of interest में मिलेगा, what we will do? We will decrease the demand for credit or the money. दैट इज़, जो हम लोन लेते थे या जो मनी लेते थे फ्रॉम द कमर्शियल बैंक्स उसकी डिमांड हम लोग डिक्रीज कर देंगे, बिकॉज जो रेट ऑफ इंटरेस्ट हम पे चार्ज करा जाता है दैट हैव बीन increased because of the increase in bank rate. When there will be decrease in demand for credit, there will be decrease in the supply of money. Further, the purchasing power of the people will also reduce because there will be less money in the economy, and because of which further the inflation will be controlled. Basically, inflation is a situation when there is excess demand, and main motive of the Reserve Bank is to decrease that demand, and by increasing the bank rate they can do so. On the other hand, if we talk about the deflation or deficient demand, the reverse will happen. That is, in that case, the Reserve Bank of India will decrease the bank rate. Because of decreasing the bank rate, it will decrease the cost of credit for commercial banks. अब deficient demand है या deflation है, तो इस केस में हमने मनी सप्लाई को इंक्रीज करना है. इन्फ्लेशन में मनी सप्लाई कम करनी थी, डिफ्लेशन में मनी सप्लाई को इंक्रीज करना है, तो उसके लिए जो बैंक रेट होगा उसको डिक्रीज करा जाएगा, विच विल फर्दर लीड टू डिक्रीज इन कॉस्ट ऑफ क्रेडिट फॉर commercial banks. And further the market rate of interest will also decrease. अब जब market rate of interest कम हो जाएगा, उसकी वजह से जो demand for credit होगी या फिर जो demand for loans होगी by the general public will increase. And further the supply of money in the economy will also increase, which will further increase the purchasing power, and then the deflation will be controlled. So this is how the bank rate works. Now you can take the same in case of the repo rate, because repo rate is also the same as bank rate, just the difference is that the securities which are given in case of taking the loans by the commercial banks is repurchased at a predetermined price and date by the commercial banks from RBI, but it will work in a similar way as bank rate. So in case of inflation, the repo rate will also increase, and further there will be increase in the cost of credit, and then further the market rate of interest will also increase, then demand for credit will decrease, then supply of money will also decrease, and further the situation of inflation will be controlled, and reverse in the case of deficient demand or deflation. In that case, repo rate will be decreased, and similarly the process will go on also in case of repo rate. From this we came to know about that the bank rate and the repo rate works in the same manner, just the difference is between the securities and the period of loan for which the commercial banks take loans from the RBI. So this was all about the first two quantitative instruments of money supply of the central bank, that is the bank rate and repo rate. The third quantitative instrument is the reverse repo rate. Now, as the name suggests, it is the reversal of the repurchase rate. Now, how it is defined? It is the rate at which the RBI accepts deposits from commercial banks through government securities. अब रेपो रेट में क्या था कि जो कमर्शियल बैंक्स थे वो लोन लेते थे फ्रॉम द RBI एट अ पर्टिकुलर रेट ऑफ इंटरेस्ट बाय गिविंग द सिक्योरिटीज. बट जो रिवर्स रेपो रेट है, अब इसमें क्या होगा कि RBI जो है वो डिपॉजिट्स एक्सेप्ट करती है फ्रॉम द कमर्शियल बैंक्स थ्रू वेरियस गवर्नमेंट सिक्योरिटीज. और यू कैन ऑल्सो डिफाइन इट एज द रेट ऑफ इंटरेस्ट पेड बाय सेंट्रल बैंक व्हेन कमर्शियल बैंक डिपॉजिट देयर सरप्लस फंड्स विद सेंट्रल बैंक. दैट इज, जब भी कमर्शियल बैंक्स के पास कुछ सरप्लस अमाउंट होगा या कुछ एक्स्ट्रा पैसे होंगे, व्हाट दे विल डू, दे विल डिपॉजिट दैट अमाउंट विद द central bank, and central bank will provide them a rate of interest on their deposits. जैसे हम लोग जब कमर्शियल बैंक्स के पास डिपॉजिट्स करवाते हैं तो उस पर भी हमें जैसे इंटरेस्ट मिलता है, सिमिलरली द कमर्शियल बैंक्स गेट इंटरेस्ट ऑन द डिपॉजिट्स मेड बाय देम विद द central bank, and that is known as reverse repo rate. And in this case, the commercial banks generate the interest income through Reserve Bank of India. Now this rate is known as the reverse repurchase rate because in this also an agreement is signed by both the parties stating that the securities will be repurchased on a given date at a predetermined price. अब इसमें भी क्या होता है, जो डिपॉजिट्स करवाए जाते हैं वो भी विद द सिक्योरिटीज़, और इसमें भी एक एग्रीमेंट होता है कि जो सिक्योरिटीज़ हैं उसको रीपरचेज करा जाएगा एट अ सर्टेन डेट एट अ प्रीडिटर्मिन्ड प्राइस. और ये जो रेट है दैट इज रिवर्स रेपो रेट, इट जनरेट्स इंटरेस्ट इनकम फॉर द कमर्शियल बैंक्स. अब ये रिवर्स वर्क करेगा देन द रेपो रेट. अगर रेपो रेट को इंक्रीज करा जाता था फॉर करेक्टिंग द सिचुएशन ऑफ इन्फ्लेशन, अब रिवर्स रेपो रेट देखो किस तरह से इसको ट्रीट करा जाता है. इन केस ऑफ इन्फ्लेशन और एक्सेस डिमांड, द रिवर्स रेपो रेट विल बी इंक्रीज. लाइक से लेट्स से पहले जो रिवर्स रेपो रेट था, द रेट वाज 5%. दैट इज जब भी डिपॉजिट्स करवाएगी कमर्शियल बैंक विद द RBI, they will get the rate or the interest at at 5%. So in case of inflation, what the RBI will do, RBI will increase the rate from 5% to 6%. Then in that case, the commercial banks will keep more deposits with the Reserve Bank of India, because they are getting an extra of 1% interest on their deposits, because of which the lending capacity or the credit creation capacity of the commercial banks will decrease, because जो उनके deposits होंगे वो ज़्यादा हो जाएंगे with the RBI for generating the interest income, and their credit creation capacity will decrease in this case. Further, when the lending capacity or the credit creation will decrease, the supply of money will also decrease in the economy, and similarly the inflation will be controlled. Now in case of deflation, what the Reserve Bank of India will do, they will decrease the reverse repo rate. That is, suppose when earlier the rate was 5%, now it is decreased to 4%. Now with the decrease in the reverse repo rate by 1%, what the commercial banks will do, they will not prefer of keeping the deposits with the RBI. That is, there will be less deposits with the RBI, and further the lending capacity of the commercial banks will be increased, or the money creation capacity of the commercial banks will increase, and therefore the supply of money will also increase, and further the deflation is controlled. Basically, you have to remember, as in case of inflation we need to decrease the money supply, and in case of deflation we need to increase the money supply. So this is how the Reserve Bank of India works in case of these situations of inflation and deflation, by following the first three instruments, that is bank rate, repo rate, or the reverse repo rate. I would like to give you example in case of bank rate also. Now how practically this bank rate works, like for example, earlier the rate of interest which is charged by the Reserve Bank from the commercial banks was 6%. Let's say it was 6%. Now for correcting the situation of inflation, what the RBI will do, they will increase the bank rate to suppose 6.5%. That is, they are charging more rate of interest from the commercial banks, because of which further the market rate of interest will be increased. Now in case of deflation, the rate of interest or the bank rate will be decreased, maybe from 6 to 5.5%. That is, less interest is to be given by the commercial banks on the loans taken from the central bank, and further they will decrease the market rate of interest, and the situation of deflation will be controlled. So this is how it actually works in the economy, and this comes under the monetary policy of the RBI. You must have heard in the news channels also that they are saying normally, like in the finance news, that the repo rate has been increased or decreased, or the bank rate has been increased or decreased. This is the main motive of increasing or decreasing the bank rate or any other kind of instrument. So this was all about our today's video, in which we have studied about the three quantitative instruments, that is the bank rate, repo rate, and reverse repo rate. In the next video, we will study about the other instruments of the credit control policy of the RBI. So this was all about our today's video. Thank you so much.